All right, guys, Alec back with another stock market investing video. Today we have a video that you guys all love. It's going to be 10 stocks to have on your watch list this week and stocks to be watching this week as well. Now, you guys know I rate stocks on a buy, sell, hold, or price alert scale. So let's go over that. We'll also go over some long-term picks, if I'm short on these ones, if I'm long-term. And we'll actually go over what I think are the best deals in the stock market right now, too. Now, we do have a big earnings week coming up next week, so that's going to be the next video. But real quick, just to get a preview, you'll see Wall Street's top analysts are betting on stocks like Apple and Snap this earnings season. But let's get right into this video. It's going to be 10 stocks to be watching this week. Now, the full earnings video will come out tomorrow, but I want to touch on a few stocks that are going to be reporting earnings on Monday, which is going to be Netflix is the big one that everyone's going to be watching on Monday. So make sure you have this one on your radar. Right now it's at 533. And as you can see, the pattern, it's coming down here. So it's going to break. And as you can see, it's been following a pretty fundamental pattern since July 7th till current date. And it looks like the resistance point is stuck at 548. You see it's 547 here, and then it did break it to 550, but then it went back down. And then again, for the fourth time, it reached about 550 as well. And then you can see the support is going to be around 500, a little bit less. So we can easily see this stock go down to 470, 480. I would put a price alert anything under 500. Now, earnings are tomorrow, so it might drive the stock up short term. As you can, and we can see a little rebound coming here. So we can see it going from where it's at now and rallying up about 5% in the short term. And then it most likely is going to be going back down to 480 to 470 again. So if you want to put a price alert on there for long term for Netflix, that's going to be the best call in my opinion. And you'll see they even have a P/E ratio of 89, which is really high. Of course, they're one of the bigger market cap companies. And then you can read some of these articles too if you want to know a little bit more about it. And you'll see in Q3 2019, Q4 2019, it did beat earnings both times. And then Q1 2020 and 2020 Q2, it was pretty much on par with earnings. It looks like it missed by a little bit. It looks like analysts have them a little bit higher than Q2. So let's see if they do beat earnings. If they do beat it, it's probably just going to be a buy a little bit, so it probably won't move the stock much. And if they miss, it'll probably just be a buy a little bit as well. Okay, so the next big one that's going to be reporting earnings on Monday is going to be Snapchat, ticker symbol SNAP. And you'll see right now it's the highest it's been since it IPO'd in March 2nd, 2017. And it's at an all-time high right now. So if you go down and look at the previous earnings, you'll actually see that in Q3 it beat. Q4 had a lot higher expectations. It still beat. Q1, the expectations were down from the analyst, and they did miss. And then Q2 was about the same, and they beat. So we're in Q3 now. And if they do beat, it's going to just be a buy a little bit again. And if they do miss, it's going to be a buy a little bit. So I don't think earnings will have a huge impact on this stock either. Overall, you'll see Snapchat has been growing revenues as well. From 2016, they went to 400 million to 800 million, which is basically doubling their revenue, all the way to 1.1 billion in 2018. And then 2019, they're at 1.7 billion, which is good to see a company steadily increasing like that. So long term, the company's looking solid, and you can see why they're at their highest since they've IPO'd 4 years ago. Now, if we take a peek at their balance sheet, you'll see their total assets are in blue, total liabilities are in pink, and what you'll see is them growing their assets year over year. And now their assets are at an all-time high, and they're keeping their liabilities relatively low. You'll even see in 2019, their assets are still twice that of their liabilities, which is always a good sign. And in 2018, their assets were almost 4 times the amount of their liabilities. which means that they might be able to get back to that point they were at before. So those are the two companies that are reporting earnings tomorrow on Monday that you should definitely have on your watch list. But let's go over others that you should be paying attention to as well. So the first one we're going to pull up is going to be Workhorse. And you'll see why they're on this list is they're down 17% in the past week. And there's been some scandals on Workhorse. We'll look up some news articles in a second so we can actually see what people are talking about. If you don't know what Workhorse is, Workhorse Group engages in designing and building performance battery electric vehicles and aircrafts. And it has a huge contract coming with USPS that can be worth a lot of money too. And it can drive the stock up another 20% if they land that. So if you go ahead and type in Workhorse and then press news, you'll actually see some good articles here. But this is the one that, you always want to be watching the bear side of things. New allegations make Workhorse even more unappealing, which is a good one to read. And then Neo versus Workhorse. This is a good one as well. In my opinion, I like Workhorse better. Keep in mind they are a little bit more risky still because they haven't landed this big contract with USPS. And it has been delayed as well, which is why the stock has been going down some as well. So let's dive into the financials. So if we pull up their total revenue here, you'll actually see that in 2015, they only had 139K. 2016, they went up 4,000% in their revenue all the way to 6 million, which is awesome for growth. And then the next year, 2017, they went up 69% to 10 million. But what we want to see what happened here in 2018, looks like they went all the way down to under $1 million in revenue. And in 2019, they cut that in half and they're only brought in 376K for revenue, which is a huge decrease, which is a big red flag in my opinion. And I would definitely look into that if you were going to be investing heavily in Workhorse and seeing why they took such a big dip. And I think if they land that USPS contract, they'll see new all-time highs for revenue. Now, if we go down to the balance sheet, you'll see in 2015, their assets and their liabilities were basically the same. 2016, 2017, 2018 got a little bit interesting because their liabilities are double their assets. And then in 2019, their liabilities are almost at $85 million now, and their assets are only at $50 million, which is a huge red flag whenever I'm investing in a company. I like to see their assets about 3 to 4 times higher. I'll settle with 2 times higher, 2 times more assets than liabilities. But for their liabilities to be almost twice of their assets, I definitely don't like that. Now, looking at Workhorse's graph here, though, it does say otherwise because you'll see the support is at 22.39. And then again, we hit 22.13, 22.47. And then again, we'll actually see it at 22.30. So it looks like we didn't hit the support. We're going up to a resistance, it looks like. So I can see in the short term, the stock running up to $25 or maybe even 24. In my opinion, though, Workhorse is a little bit of a spec stock and it's going to be coming with a little bit more risk as well. So if you're more tolerant to that, I think a lot of the investors are banking on that USPS contract. And remember, they can always not get that USPS contract and it can go down to $2 again, for all we know, if they don't land that contract. So overall, I would say Workhorse is a wait for right now. And if you really want to get in, I would put a price alert anywhere between $15 if you're really low on risk. And if you're looking for more of a short term, I would put it at about $22 a share and then ride that momentum up to $24 to $25. All right, the fourth one you guys should have on your watch list this week is going to be Fastly, ticker symbol FSLY. It's down 33% this week is why we're going to be watching it. It was just at $130-something a share, and you'll see in one day it did plummet about 30%, and then it continued to go down a little bit more. I did pick up $50, a small position, see what that's going to happen. It has an $8 billion market cap, so it's not just a small company. And if you look at the earnings, they have consistently been beating earnings. And just in Q2, they actually reported positive earnings. This was also a good article I briefly do want to go over. Fastly Saga may be warning investors to pick future winning stocks wisely, says strategists. Fading corona stimulus hopes and rising cases across the U.S. and Europe, investors having to press the sell button on stocks this morning, with technology sector set to bear and burn when Wall Street opens. In an ugly spotlight Thursday, shares of Fastly are down 30% in pre-market trading. The cloud platform company cut its revenue forecast and yanked its full-year guidance after its biggest customer, TikTok parent ByteDance, failed to use its product as much expected due to the U.S.-China tensions. Fastly has gained over 500% this year as investors have piled into those so-called growth stocks that have either thrived or haven't. And then it goes on to say that, an individual investors may be a step behind here. According to Financial Times, some hedge funds are starting to adopt the view that the best is over for some of these so-called COVID-19 winners. And then meanwhile, they went on to say that banks have reported this week are generating $20 billion a quarter in net income. That is, and they are continue building reserves for credit loss expected to emerge next year for the pandemic. So if you go to Fastly's financials here, you'll see their total revenue. And in 2017, they reported $100 million. In 2018, they had a 37% increase to $144 million. And then in 2019, you'll see they had another 38% increase on $200 million on revenue. Their net income, they've actually been reporting negative net income, which is never a good thing. And as far as their assets and to liabilities on their balance sheet lie, I absolutely love them. You'll actually see in 2017, they had about 3 times as much assets to liabilities. In 2018, same thing. They had about 3 times assets to liabilities. But here you'll see in 2019, they actually got their liabilities even lower, and they increased their assets by almost 2 times. So now their assets to liability ratio is about 4 to 5 times more assets than liabilities. So after they've had 500% explosive growth in the last year and a half, analysts are saying their biggest growth years are probably behind them. I would say overall, long term, this is a great company to get into. Their balance sheet looks excellent. If you can put a price alert around $80 on them, even if you are super conservative, go ahead and put a price alert around 65 on this company. And I think we can see this one at new all-time highs again. So another 30 to 40% gain in the next 12 months is realistic. All right, so the 5th one on the list is going to be Bank of America, a good banking stock, a safe bet. And you'll actually see why it's on our list. It was down like 6% or maybe even 8% at one point in the week, all the way down to 24. So if it gets even back up to $26, that can be a nice 7% gainer, which I think is super realistic. And I think in the long term, if I'm going to be holding this one for 12 to 24 months or even longer, I think we can easily see a huge increase back up to some new all-time highs too. So if we get a new all-time high, which you'll see is about 35, that can be an easily a nice 60% gainer over the next 12 to 24 months, which is about 30% a year. So if we scroll down, you'll see I have about 500 equity in this company, Bank of America. PE ratio of 11, which is amazing. Market cap of $200 billion, so they're still a huge company. Even being at $24 a share, they still have a good market cap. They're all 100% buy or hold, no sell going on. They did just have earnings, and they did just beat, and you'll see they've been beating earnings consistently for the last couple of years. If we go to their income statement and look at their total revenue, they've been pretty solid, just the same with the revenue. And it's been increasing by like 5% here, 5% there. Income has been increasing, their net income, which is always a great thing to look at. So in 2015, it increased almost 200%. In 2016, it increased 12%, which is still amazing for a company to be increasing their net income by double digits, 12, 13, and then in 2018, they increased by 39%. Now, it looks like in 2019, they did have a little bit stumble. So I would actually pull up a 2020 net income statement on them. This one isn't all the way up to date, but it is out there. You could probably find one for quarter over quarter. If you, instead of looking at year over year, if you look quarter over quarter, you can see Q1, Q2, and then maybe even Q3 of Bank of America 2020. Now, their balance sheet isn't the strongest in the world, but for banking, balance sheets are a little bit different. You always want to compare typically the balance sheet within the sector. So with banking balance sheets, it's hard to find, double the assets as liabilities. So this is pretty standard. Overall, I say Bank of America is a buy right now. They are down 4% in the last week. But if you can get in at 23.50, that's going to even be more attractive. But I would say they're overall a buy right now. I even have $500 in myself at this price point with an average cost of 24.39. All right, the sixth one is going to be United Airlines, ticker symbol UAL, down 7% this week nearly. They're a great time to buy. I'll tell you right now, I think this one is a buy overall. I have about $433 in at an average cost of 34.35. Overall, I think this is going to be a great long-term hold. I'm going to be holding this one for at least a year to even 2 years. I can see them getting back up to some new all-time highs. I can see them even getting back up to $50 a share. Their all-time high, which they were at for a while, was like $80, $90 a share. So $50 a share is completely reasonable, especially because the numbers are starting to come back. So you can imagine 12 months from now, the numbers are pretty much going to be normalized to what they were before the whole Rona situation happened. Now, I like Delta Airlines as well, so let's compare United against Delta. Delta is going to be my number 7th pick. So first we'll go over the financials of UAL, and then we'll go over Delta. All right, so remember this total revenue, so we can actually compare it against Delta, but you'll see total revenue is about 37 billion, 36, 37, so right around that 37 to 40 billion a year, and their net income was around 4.2 in 2015, and then it fell to 2.2 to around 2 to 3 billion on their net income. Their balance sheet, you'll actually see they have 40 billion in total assets in 2015, and then they have 31 billion in total liabilities. If you fast forward to 2019, 52 billion in assets and then 41 billion in liabilities. So let's pull up Delta. So if we look at total revenue, they both have very similar revenue, but if you go over to the income, you'll actually see this is where they have them beat. So in 2017, they never went down to 2 billion. They stayed at 3.6 billion. And in 2019, they're at 4.7 billion. So they are going to be and then also, if you scroll down to the balance sheet, you'll actually see their balance sheet's a little bit stronger as well. They have more assets than liabilities, where United, they had pretty much the same assets as liabilities. And if you look at 2019 on Delta, which we have pulled up right here, they have 64 billion in assets and only 49 billion in liabilities. So they're about 1.5 times more assets than liabilities, which is stronger than United. So overall, I would say these both are going to be buys, Delta and United. Delta's a little bit better if you're looking for more of a safer position. United, I like a little bit better because it has more upside that you can actually see. So it actually recovered. Delta has recovered really well since the whole Rona thing going on. You see they were at $19 a share. They're back up to 31. And even if they go to a new all-time high, it's only going to be about 50 to 60. So you can actually see about an 80% increase over the next 12 to 24 months. So United has a little bit stronger, a little bit more of an upside, where Delta is going to be a little bit more safe to put your money in. They have a stronger income statement and a balance sheet, which is really important when you're looking at long-term growth. So overall, I hope you guys did enjoy that video. I had 2 more stocks on the list, but unfortunately my microphone wasn't on, so it didn't record my voice over the videos, which I'm pretty upset about. But I'll add those into the next video. I'll actually do a separate video on them. They're going to be Wynn Resorts and MGM, which I'll just compare them against each other in a whole separate video. Maybe be like a 4 to 5 minute video, a quick one, going over everything. But I hope you guys did enjoy this video. I know you guys like the ones where I add to the watch list and kind of tell you what I'm looking at and adding to my watch list. So leave a thumbs up if you want to see more videos like this for the watch list. Leave a comment below on what you want to see next. Share this with your friends because it does really help when you guys actually share these videos with your friends. And leave a comment as well. Smash the thumbs up button. And if you guys liked it, subscribe to my YouTube because that's the only place you're going to be catching these exclusive, long, detailed videos. My Instagram feed, that's more of like a just short clips to kind of get people over to YouTube. Now the stories on Instagram, they're up to date. I have really good story on Instagram if you want to follow me there too. But YouTube is definitely going to be the detailed videos. So hit the thumbs up button, leave a comment, and then until next time, guys, remember, don't time the market, buy the market. Peace.